stop chasing. Listen, I want to talk to y'all about something real quick, man. Let me cut that off. Let me cut that off before they try to get me and hit me with a copyright. But I want to talk to y'all about something. We as retail traders have to understand this, okay? It is so important to understand this. And I mentioned this in the group. So this might be a little bit of a, a review or like, whatever for some people. But we're food. We're food. As retail traders, we are food, okay? The expansion, the ever-growing size of retail traders, the ever-growing size of the amount of capital that we, distribute through the market, it is welcome with open arms. Because what does it mean? It means that there are more and bigger opportunities for the true traders, Wall Street, institutions, to really, really, really make the capital that they want to make. All right, I'm gonna illustrate how this is all working out on the charts while you're trading. I'm gonna get you guys to understand what it is that's taking place on a consistent basis that you don't know about, that is causing you to lose money, that is causing you to not be able to identify a big play when it's forming, right? Now, the reason I say your food is because it's like the food chain in the stock market, right? It's like the bigger money, right? The people who have the information first and have the larger pockets are typically going to be the ones who control the market. When you have control, you can take the market in the direction that you wish for it to go in, and you can also manipulate the people who are naive. All right? Now, when I say naive, it's not an attack on you, right? I'm not insulting your intelligence or anything like that. But there's just certain things about the market that you may not be aware of, right? Now, I want you to think about the stock market like this. I know we've been taught the stock market and, trend lines, which are very important, by the way. But, uptrends, downtrends, stuff like that, bearish trends, and then like support and resistance levels and stuff like that. We've been taught it at a very basic level. And one of the first things that you learn as a new trader is how to protect your capital. But the way that you're taught to protect your capital is not necessarily the smartest way, right? It's actually something that helps out what I'm going to call the opposition, right? They don't have to be an opposition if you learn how to trade, and we'll get to that in a second. But the way that you currently trade, they are the opposition. We understand that at the end of every winning trade is a losing trade. So they are the opposition, the way you currently trade. So we have support levels, resistance levels, and we're like, all right, whenever it comes to this support level, this flat number, we're going to go ahead and do this. When it comes to this flat number down here to this support, we're going to do this. It's going to bounce. It's going to reject, right? But when I remember this distinctly, when I first started trading, I was like, is it really going to come to an exact level every time? And if it doesn't, I'm just like screwed. I remember asking myself that, like, and I know y'all probably asked yourself that too. Like, let me know in the comments if when you were learning how to trade, you were like, so if it's as easy as it coming to this exact level, then everybody can make money in this. Like, everybody will be rich, right? Gurus swearing by, oh, when it comes to this level and it's just one number, this one number, you'll be fine. I'm like, if the game was that simple, then it would be way more, winners. But because it's a win-lose type of thing, the game has to be complicated and intricate in order for there to be some sort of manipulation. There has to be some sort of bait and switch. There has to be some sort of veil that's over a certain audience's eyes. Because with that, then, okay, that's when the money can be made. But if everything is just equal and even and super simple to everybody, then, it just wouldn't work. It just wouldn't be a game. So the whole idea of a game is there being some sort of problem, there being some sort of like thing that you have to figure out. And you haven't really started playing a game until you've realized what this thing is. All right? Most people are just participants, but not really playing. They're really just the food, right? So you're not an active participant in the game. You are just getting eaten up and getting your money taken. Now, markets move because of large entries. They move because of what we call whales and hedge funds and people that are trying to make, these large moves. Now, you'll notice that we go through these phases of like consolidation, right? We go through these phases of, accumulation, right? And a lot of that takes place because, matter of fact, not a lot of it, it all takes place because of the way that hedge funds or institutions are buying up stocks. Now, I know you've been in a play at least once or twice where you saw where you wanted something to go. You saw the structure of it. You had your little trend lines drawn. You had everything out, and then it didn't go there. Like in the time frame that you was thinking, like something happened. You're not tripping, my friends. Like, you've been manipulated. Literally. The market is manipulated not even on a rare basis. Like sometimes on the rare basis, it can be more drastic than other times, but you get manipulated every day in the market. You just don't know it, right? Something is happening to price action every day and you don't know it. And the reason is because you're not supposed to know it, right? You're not supposed to know it because you not knowing it is what allows them to win. Now, your stop losses, that precious thing that you've been taught to hold on to from the very first time that you started trading, is the very thing that creates the liquidity for these institutions. It's called stop loss hunting, right? This is giving them an idea of where they can go and buy up so that they can take you out of your position, and then it goes directly in the same direction that it was going to go to initially, but it came to that point where you were like, I can't do this anymore. So they know you're a quitter. They know that you're going to try to protect your capital at all costs, but you don't know how to do it the proper way. Now, I'm not saying don't protect your capital and just be, random and just throw money, because I can already hear the trolls like coming in like, oh yeah, so you're just saying this trade and don't even think about it. No, it's not like that. The way you protect your capital is by the amount that you leverage. The way you protect your capital is about when you enter. And if you knew when to enter, you would have to worry about keeping a stop loss, right? You would not have to worry about keeping a stop loss. The stop loss is for the amateurs. If you notice, anything that's distributed by Wall Street, anything that's distributed by these professional trade groups or whatever, it's always something that builds a habit that will later be for your demise. And I know people don't want to talk about this, but a stop loss is for your demise later. At some point, it either takes you out of the trade way too soon, or it literally just is a dead giveaway of when you're going to get out, making it easier to manipulate the market. They introduce multiple zero DTEs. Now it's even easier to identify the stop loss because we got people that are a little bit more afraid because there's more zero DTEs, right? One day of manipulation can change the whole situation when you got 3 DTEs on these Mag 7s. Just think about it. All right? Think, what if everything you learned was to set you up to lose? What if everything that you learned, think about even these brokerages. These brokerages give trainings on their platform. I don't even believe half the stuff, yes, candlesticks and the basic stuff, all of this stuff is true, but there's a lot of little nuances to that stuff that they will not reveal. And if you continue to trade in the manner that they teach you, over time, you will lose. It's a fact. It's a fact, right? It is important to understand the way that they trade, right? You have to trade along with them. If you can't beat them, what? Join them. That's literally the only way to win in the market. You cannot beat Wall Street. You can only join Wall Street. Hear me clearly. You cannot beat Wall Street. You can only join them because you do not have enough capital. That simple. That simple. So when your stop losses are placed, that is usually the place where they come and they hunt, and then it goes in your direction. You get taken out of your stop loss, and then it goes in the direction, right? If you look at every time you took a major loss, and it wasn't like some emotional thing, it wasn't something that you were dealing with personally, it was more of just like, your setup got blew up, you didn't wait. Now, there are multiple ways to wait, right? There's multiple phases. So the people that win in this game are the most patient. So a patient person may see like a failed 2D and take it. A very patient person will see a failed 2D and then a bullish confirmation and then take that call. But the most patient person will see a failed 2D, not take it, the bullish confirmation, not take it, and they will wait for the rug pull or the manipulation. When that takes place, it's like, gotcha. Gotcha. That's when the money is made. It's when it's not so obvious. It's when the move seems like it's over, right? It's when you think that there's no hope for something. And I'm not saying get into something blindly, but when you do have a setup, practice just being a little bit more patient than you would have normally been, just to allow you to see the rest of how the play plays out. This is why paper trading is so important. This is why having non-trading days is so important. This is why when you feel like the nature of the market is a little weird, to just not take trades at all is really important, because this is where the true learning takes place. When you're emotional and things are going against you, you're taking your losses personal. When you have no skin in the game and you're just studying, then you get to objectively see what the market does. And you'll notice that every time there's like a little sweep of where most people would get out based on what they were taught. And then there's where the real traders get in and they make money every time, hand over the fist. And the plays go way further. Right? We talking about, when's the last time y'all seen me take a trade that was like less than 20%? It's rare. Most of them be like somewhere between 30 and 40 if we're gonna put an average to it. A lot of times it's more than that. It's in the hundreds, like 70, 80, couple hundred. You know what I'm saying? And there's a reason for this. It's because of the entry. It's because of the level in which we're getting in. Now, on swings, this doesn't take place as much, right? So you'll see me take a bullish confirmation on a swing and it'll work out, right? But there's also been a couple of days of rug pulls where it didn't, where if there was just like a little bit more on the patience, right? Those two, if I remember correctly, it was like Nvidia or something like that, some time ago. But the rug pull was the manipulation. That was the little trick that was getting these bigger players into their positions. Why do bigger players? Why is this taking place when? Why is this? I almost hit this lady. Sheesh. She just. All right. Wow. He just completely just walked across and didn't even. There was no like light or signal or anything. Why is this taking place? It's taking place because the liquidity is, like I said, fuel for them to be able to get into the position. So when we're in a phase of, when like an accumulation phase or consolidation phase, downward consolidation or upward consolidation, whatever, right? Some sort of channel, it's because, bigger money is getting into it and they're trying to do it without the market changing too much. Why are they trying to do it without the market changing too much? Because they want to keep their price low too. They want to keep their price low, so they can't just dump all their money in at one time. So that's one reason. And then also, there may not even be enough sellers in place for them to be able to get the amount of, of shares that they want to get. So what happens? They have to come and get that liquidity so that they can actually get in large numbers. Now, see, that's another thing. The little money that we spend, and we don't even have those problems. We don't have to worry about. Rarely we can't get filled on something, maybe because it's like a second off or whatever. But that's it. For the most part, we can get into all our plays like that. They have to strategically get into their plays over the course of time, right? So this is where you see the, like the hesitation, like, it looked like it's about to do its thing, then it doesn't. It looks like it's about to do its thing, then it doesn't. Then it manipulates, and it goes into a direction. It's like, hold on, that's not the direction it's supposed to go in. Then they come in and get in, then it goes in a direction. All right? Again, order block indicators, right? Order block by Lux Algo is going to help you with this. Fair value apps is going to help you with this, right? Understanding these little spots and pockets on the charts where smart money decides to get into a play is going to help you with this. We caught a banger on Palantir today, right? The same exact thing I'm talking about right now happened, right? It tricked you out your bag, and then it went and made a crazy move through the range that it fell out of to manipulate. It's a crazy, crazy, crazy cycle, y'all. It's a crazy, crazy cycle, and you don't have to be a victim of it, right? So, I'm sitting here parking, y'all. You don't have to be a victim of it. All you got to do is just make sure that you are keeping in mind that there is a level of patience that you have to possess, and to not trade how everybody else is trading. This is why it's important to get, a membership with a real community. Not just, if you see a community where they're saying the same thing, everybody's saying the same thing, that might not be the community for you. And Prosperity Collective, what you're seeing us do is update our knowledge consistently. We are always making sure we have the best information consistently so that your trading is always going to be at a high level that matches the current market. I've been on here long enough. I hope this was helpful. If you got any questions about what I've talked about, drop it in the comments, okay? If this was helpful to you, go ahead and hit that like button. Go ahead and hit the subscribe button so you never miss anything else again. All right, I appreciate y'all. If you want to join the Prosperity Collective and be a part of the best trading family, not group, family on the internet, then hit the link in the description of this video and all my videos. It's always love over here. Remember, invest smart so that you can live free. I'll see you in the next one. Peace.